Woo woo. Welcome back, guys. It is Market Monday update. I am super excited to have a special guest on today. He actually is no guest to our channel. He has come on, honestly, most of last year, at least once a month, talking about commercial and the real estate commercial area of all the things,
Mhm.
since I talk more residential. So I'm super excited to have David back with us this
Yes.
this year, and we're excited for you to be back, David. Of course, tell them
Thank you.
where they can get your information and a little bit about you, and then let's jump into things.
Definitely. Yeah. Well, thank you, Kira. Sounds like you're having a great start to the year.
Yes,
Congratulations. And
thank
that's
you.
great. So it's
It is.
great to be in Texas, great to be in Dallas. So I love it. Yes. So I speak with Kara all the time. So she's got my contact information, but my phone number 972-679-9845 or at ddunaway at KW Commercial. And like I said, she's got all that info if you want to reach out to her. But today we're going to talk about financing or mortgages for commercial properties. And in the end, I'm going to predict whether interest rates are going up or down.
Oh, good.
I have the answer. No.
I
Anyway,
know.
that'll keep them here for a few minutes anyway.
Yes.
Most people finance commercial properties. You do see some cash purchases, particularly smaller type purchases. Maybe an entrepreneur or somebody that just has the cash available. So that is certainly always an option. Your seller's going to love that. A cash purchase typically close quickly and it can make things go real well. Some people, if you're building a portfolio, will purchase cash and then do cash out refis at the back end so they can close quickly with cash and then finance it later, essentially. But the majority of commercial properties are financed. So we're going to talk a little bit about that. So when you go in, you'll see the cap rate. And refreshing everybody's memory, the cap rate is basically the yield, kind of like if you had a dividend stock, the dividend rate and the cap rate are similar. Cap rate would be just the income over the purchase price of the property. So typically today you may see a 7 cap, they call it, some 6 caps. If you get up 8, 9, 10 cap rates, you're probably talking either distressed or maybe a bad area, something challenged about it. But what the banks will do is they will look at your income and do what they call a debt service coverage ratio, DSCR. You might see that number. But what they're doing there is they want to see the income from the property divided by what your payment's going to be. So 1.25 is typically what they want to see, meaning your cash flow is 25% higher than what that mortgage payment's going to be. So you'll see DSCR somewhere out there, debt service coverage ratio. And what people are avoiding is negative leverage. So as interest rates have come up and yields or cap rates have not necessarily come up, you have what can be called negative leverage. So if you're borrowing at 6.5% and only earning 6%, that's not a great thing. So that would be considered negative leverage. Now you see some of the big institutional players will do that because maybe they're paying cash or they've got a real long-term hold, but typically you don't like negative leverage. And the bank is going to look at a lot of different things, and I'll describe some of them down below, but essentially either a mortgage broker or a bank, they're going to have to take your package, your building and you to their committee, investment committee or other lenders and try and sell them on it. So they look at a lot of different things, and it's kind of like a legs of a stool, they call it. Maybe this one's good, this one's not, and you just want to try and squeak through. So they will usually look at the individual and the property in cases sometimes it's big enough that the property can pass on its own, but typically they're going to see the buyer's track record and your credit rating. Have you managed buildings before? If you're what's called an owner operator, you're running your business there. How long have you been in business? Are you profitable? So they potentially are going to get into some, pretty good detail on your background and things like that. So credit rating, et cetera. So there's a few different ways to do financing or different things you can do. First of all, it's just a straight purchase. I'm investing in a building, or maybe I'm an accountant, want to run my business out of that building. They're going to look at certain things. So loan to value is a metric they're going to use, which essentially says how much debt will they put on that building. You can also flip it over and say, what's the down payment? But typically loan to value is about 70%, meaning 30% down or 30% equity. They might go 75% depending on the situation, depending on the strength of the borrower. Interest rates today, probably 6.5 to low sevens. Riskier buildings might get up to 8 to 10, but I think you could count on 6.5 to 7, 7.5, something like that. The term in commercial is different. It's not a 30-year mortgage. It's typically a 5-year note in commercial. Now, they can get up to 7 or 10 years, but 5 is typical of what we see out there. And often no amortization. So it's just basically a balloon that you're going to pay at the end. It can be interest only. Those are not necessarily easy to get, but you may just be paying, interest only or some other payment on it. So what they're going to look at, like I say, is the strength of the borrower, and then how much do you want to borrow? How good is the property? And there's something called non-recourse you've probably heard of. That is where you can not be personally liable for the note. So if there's problems, the bank comes and takes the note, and they don't come after you at all. So non-recourse is very good. That's what the real big investors try to do. It sometimes costs more, and it's typically only for loans, maybe 5 million or above. But non-recourse is a great thing.
5 million and above, and it has to be five. It's typically 5 years. Woo.
Yes. Yeah. So yeah, I work with a lot of funds, and a lot of them have done real well. But when you see the kind of risk they take, and you can imagine the property tax bill that a $5 million building is racking up. So, you minute by that, the clock is running and the interest on the note is going. So I just saw an article today. I focus on industrial properties, warehouses, and Dallas has the most empty warehouses still in the country, particularly down in the Lancaster, Duncanville, that South I-45 area. But you can imagine, actually, I met with one of them. They have a 1.5 million square foot warehouse empty down there. And the carry cost, if you buy a rent house and it sits vacant, that's, costing you something every month. But you can imagine a 1 million square foot warehouse. So that's where the big boys play.
Yeah.
A very good thing is I sort of references what's called owner occupied. So if you run a company and run that company out of a property, banks love that, because they know that you're typically going to pay the rent. You're trying to keep your company running. The longer the track record, the better. But certainly, if you're owner occupied, that's a great thing, and I think you get a real good loan typically there. The other thing is construction loans. I talked to a number of people. The industrial market is still very tight. They're saying, "Hey, I can't find anything. Let's build something," which you certainly can do. Land costs are high these days, and there's challenges. But what you do with a construction loan is you have a construction loan, then you roll that into permanent financing once it's finished. Construction loans going to be up to 10% interest, and you'll typically have a line of credit and just draw that down as you're paying contractors and paying for materials. But construction loans are good. They've got high risk too, because of the interest and the schedules you're working with. But certainly people have done very, very well there. And then finally, a cash out refi. This is something that a lot of commercial people will do. Working with an investor, he really hit it right. He bought a pretty nice warehouse down in the Redbird area off of 67 there, and really hit it right. Bought it in 2019, and he was just able to cash out for about $3 million to himself. So, and he's running his own business out of there. So he's really got a great situation. So yeah.
Heck yes, he does. 3 million. He bought it for how much in 2019?
I don't know the exact numbers. It's worth about 8 or 9 today. So, so he's really doing, I think he bought it for 2 or 3 and then cashed out. So yeah, but now he caught a real nice, spike in the market. So, but he's a great guy, a hardworking guy, runs a business moved here from outside the country, and he's done really well. So good stuff. But I would encourage you, everything I say here, kind of a disclaimer, is my experience with lenders. So certainly if you're interested, contact Kara or me. We've got a good group of commercial lenders that we work with. You would be wise to get your deal out in front of several of them and let them bid on the business. And we've had some that can really do some challenging deals. I guess I'll say challenging, but in other words, a small business person like us, we're not, Fortune 500 or anything. So it's good to go to a bank that really wants your business and things like that. So we'd love to work with you guys and get this going. And the big question, of course, is, are interest rates going up or down? Nobody
Honestly,
knows.
well, in residential, I
Yeah.
was going to say in the residential, side of things, they're gradually going down. And
Hmm.
honestly, it's like a hiccup. So like interest rates can like jump up, but then they like kind of bounce back to like
Yeah.
being
Hmm.
hovering, or vice versa. They can bounce down. So
Hmm.
my biggest thing I want to tell people this year is like stay ready so you don't have to get ready. If
Right.
buying a property is something that you want to do,
Hmm.
prepare everything now. Like get your credit where it needs to be, get your savings. So when it does bounce, you can jump on that opportunity.
Hmm.
You feel like
Yeah.
it's the same thing for commercial?
Yeah. Oh, yeah. And like I say, we're so lucky to be in Dallas, where just all the growth is, and so
Praise
much
the Lord.
interest. People want to loan money here, both local and national companies. So yeah, we would love to talk to any of you listening. I remind you also, if you just want some study, a market study. Hey, what is my property worth? Or hey, I want to rent a property here. What would it cost me? We love to just get that out to people and help you make decisions, because it is a big decision. And like I said, Kara's got my number, but 972-679-9845. Would love to talk to y'all. And
Thank
Happy
you
New
so much.
Year.
Yes, Happy New Year. I'm going to for sure put your information in the YouTube description. So if you're watching this on LinkedIn or Facebook, please go to YouTube, type in my handle, which is just Kira Ford, and I'll have his number, his email, and you'll be able to reach out to him if you haven't already reached out to me for us to help you. But like I said, he is like all things commercial. He does specialize in warehousing, but we do have other like retail and other areas that we can send you to peeps. So don't be
Mhm.
hesitant. We want to help you and we want to inform you so you can make an informed decision. So,
Yeah,
um,
KW Commercial has really good specialties across all product types. So it's land, construction, or like you say, retail, office, apartments,
exactly.
etc.,
Yeah,
industrial.
multifamily, all the things. So
Mhm.
thank you, David. And we'll see you next month. And David's going to be coming on the last week to third week of each month, right? Unless something pops up.
Mhm.
And he'll be just giving us updates on all things. So next month, what should they look forward to? This month was how to get finance. Is next month like warehousing? How do you want to do this year?
Well, I thought we would sort of just, excuse me, go across the state of Texas and just look at certain regions across Texas. It's
Okay.
great investment opportunities. I really do believe Dallas is the hottest in Texas, but certainly Austin, San Antonio, Houston, the Valley, El Paso, really a lot going on across the state. So I figured I'd just give a real high overview of the state.
Okay, love that. Well, we are excited to see you next month, and
Yeah.
we'll talk then. Thank you again.
Let's do it. Thank you, Kara. Everybody have a good evening.